I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Whitney Elkins-Hutten. Whitney is the Director of Investor Education at PassiveInvesting.com, host of Passive Investing Made Simple YouTube show and podcast, and a partner in over $800 million in real estate. Whitney was on the show previously, so I'll say thank you for coming back, Whitney. I'm really excited to talk to you again.
Yeah, thank you so much for having me. This is going to be fun.
Yeah, absolutely. Well, why don't you just give us maybe a little bit of your background, so people that are, if they're just picking up now and haven't listened to the last one, although they should, it was very good. Tell us a little bit of your background, and then I know we have some kind of cool new things to talk about today, so I'm excited.
Yeah, absolutely. Well, as you said, I'm the Director of Investor Education here at PassiveInvesting.com. And what I get to do is I get to talk to investors all day long about the powers of passive investment and helping them attain their goals in cash flow growth, equity growth, tax benefits, and diversification. I used to be a Director of Investor Relations, so I'm very familiar with the ins and outs and of the raises and all the details that it goes into to put together these general partnerships. Spent a few years in that seat. But I didn't start off like that. I don't have a degree in real estate. I started off as an accidental landlord back in 2002 and bought a house with a significant other. Relationship fell apart. The house and all the bills were under my name, and I got a little paranoid. What am I going to do? And so I stuffed the house full of roommates and who didn't mind living in a construction zone, and bought the Home Depot 1-2-3 book because YouTube didn't exist back then, and taught myself how to rehab a house. And 11 months later, I realized I made more in rehabbing this house and repositioning that house than I did at my day job, where I was traveling upwards to 80 hours a week sometimes, doing disease investigations. And so I was working in public health, and so I was bitten by the real estate bug and did several more flips, what they call live-in flips on my own, taking advantage of the 121 tax exclusion for, primary residences. So rehab the home, trade up, do it again, but I couldn't figure out how to unlock those golden handcuffs with passive income. And it wasn't until somebody said, "Hey, why don't you hold on to one of those rentals and put a renter in it?" I'm like, "Oh, brilliant idea." Why didn't I think of that? And then, that's when it was off to the races. My husband and I, we scaled a portfolio of over 30 single family rentals, still doing several flips a year, and then eventually transitioned into buy and hold multifamily real estate, both actively and passively. And I scaled both sides of the portfolio when I realized I could use my personal holdings to be like a little ATM to build up my passive income, so I could get those 5 freedoms in life that I so desired. Like, not only just time freedom or financial freedom, but time freedom, freedom of choice, freedom of location, freedom to make an impact. So that's what I do today. That's what I'm passionate about, sharing with people, but also helping them replicate in their own lives.
Yeah, absolutely. I mean, it is really kind of fascinating when you hit that point where you realize the power of, I mean, whether it's active or passive, but that power of real estate, and specifically on the passive side, just how do it almost becomes like an obsession of now for me, it's like, how do I get to that point where I legitimately could just be, we could live off that, right? Just like totally off of passive income. It's so tax advantaged, and it's called passive because you don't actually have to do anything for it. You've done the work, you put in the time. Now you use that money to sort of grow your wealth from there. So I am equally passionate about that. I think it's an extremely important thing to have those opportunities out for people. what's new? What have you been focused on lately?
For myself personally, just continuing to grow our portfolio in a stabilized way, risk mitigated way as we kind of work our way through this choppy water environment that we're in. Really paying attention to that any asset that we invest in, has capital preservation to it, cash flow, equity growth, tax benefits, multiple ways that I can get paid, right? And has a clear plan for growth over time. Professionally, we're focused on providing those exact same assets to our investors. One of the cool things that I love right now in the space we're in is building out a express car wash portfolio of about 250 to 300 locations over the next 5 years. So it's such a booming industry. It's growing lightning fast, and it really has like the likeness of the fundamentals of self-storage about 10, 12 years ago. So that's something we've been focused on right now.
What is it about them? I mean, I you say that the fundamentals of self-storage 10 or 12 years ago. I assume by that you're talking about sort of it's mom and pop owned, and so the opportunity to sort of upgrade these to a more I guess today's sort of operations. But what draws you to that? What do you find appealing about moving into car washes?
Yeah, it's a well, first of all, it's an industry with a lot of runway to it. It's a $33 billion industry and growing. And it has a very stabilized base, like customer base. Why? Because most Americans have cars, and most Americans don't wash their cars in their driveways. They go to a car wash. And when they go to the car wash, they want to be in and out very quickly. So there's actually, 4 different types of car washes. And, we are focused on a very specific kind, but let me cover the other ones so people really kind of understand. And that is, you have your DIY car wash, right? You kind of pull up in a bay and you drop your quarters in, and you get your hoses out and scrub brush, and you wash your own car in somebody else's driveway, essentially. Right. Or then you have your in-bay automatics. Those are attached to like self-service gas stations. But the problem is if you're 2 or 3 people back in line, you're probably going to bug out and go do something else. So they're not very effective at getting multiple cars through a day in a very timely manner. So they're not very scalable. They're great for, as an extra income stream for that gas station. Then you have your full service gas station, or sorry, car washes, where you pull up, there's an army of people that vacuum your car. It goes through a short, say 30-foot tunnel, and then at the end, somebody, army of people wiping down your car, cleaning out the inside. Those can get a lot of cars through a day, but they're not very scalable because of the large overhead associated with them. And so the sweet spot really is this express tunnel car wash. So I know that people have seen them pop up more recently, but you have a large bay of vacuums. For the person, you can come in, they might vacuum their own car, or you can pay extra to have somebody do it. It goes through a long tunnel where every aspect of cleaning the exterior of that car is handled. The pre-wash, the wash, all the wax, the tire shine, everything gets provided in that tunnel. And we can even modulate based on what that person's subscription is that they purchased, what kind of wash they get. And then, it's also dried at the end of the tunnel, and the person the customer just dries away after that. So we're really focused on the express tunnel car wash because there's scalability. So that's another thing we like at the space. You can get 400 to 500 washes a day and only have about 2 to 3 full-time employees. But most of these car washes like that are owned, like you said, by mom and pop owners. They got into the space, all starry-eyed, thinking, "Oh, great, this is a great way for me to grow my investment portfolio." And lo and behold, they were never able to step away from operations unless they got 5 to 10 locations and were able to hire a regional manager to get them out of operations. So we're consolidating. This is one of the kind of value adds of the business, is that we're able to consolidate these purchases, these acquisitions from mom and pop owners. But the only way you can successfully consolidate is if you're able to solve third party management, because there is no third party management for car washes. express tunnel car washes. And so we actually saw this opportunity. We're like, hey, we can build this business. We've done it before. And so we are essentially taking what we've done in our self-storage business from a technology standpoint, scalability standpoint, and applying all of those lessons learned to build our own car wash third-party management company. Now you have an asset that you can not only scale through operations and acquisition, but now it's more attractive to large private equity companies, REITs, because they don't want to manage assets. They want to clip coupons, right?
Yeah.
They want to place it with managers. So now we have like, some higher larger exits in mind, even to the point where we could IPO this if we would like. And so that's really where kind of a lot of the value added is in the space. There are other operators out there that are doing ground up development, which we will too. But they're probably operating through a franchise model, which, for me as an investor, makes me a little nervous because I don't, do they own the land and do they own the brand associated with that car wash? And more oftentimes than not, the answer is no to at least one of those questions, if not both. And that really adds a lot of risk to that investment for an investor. Fine if you're the operator, totally fine if you're the operator, but as a passive investor, I want to make sure the operator has end-to-end vertical control over the entire asset.
That's fascinating. So is this a, personal portfolio thing, or you're syndicating this?
At passiveinvesting.com, we're scaling a 250 to 300 unit locations to build a portfolio of this. And yes, I have, participated in this group of investments for sure. Personally, I wholeheartedly believe in it.
Yeah, I mean, it makes total sense. I mean, you've got, and especially that the point about, there being no third party management and sort of essentially creating, real estate and business together makes a ton of sense. So what, from a return standpoint, what would you see in, the car wash space? It may be compared to self-storage or multifamily or something else that people might be at least a little bit more from. I think we all know what a car wash is, but it's in terms of investing in them, what do you see from a return standpoint?
Well, I think the first questions to really ask is like, how is the value created, right? Because if you can understand as an investor how the value truly is created, then you can understand, oh, great, that's how they get the returns, right? Yeah. And so one of the things, I said that we're able to take a lot of lessons learned from the self-storage space and technology and layer on, our passive investments here. But one thing is moving the income from, just transactional income to monthly recurring revenue. So when we acquire a location, we're going to go in, we're going to, rework all of the branding, we're going to layer on our processes and procedures. And we're also going to, move customers from just paying per car wash, say like, I think the last time I paid for an individual car wash, I mean, I got the works, but it was $40. It was, which is not, I mean, that's pretty pricey for a car wash. Yeah. However, but the next time I go back, if I want that same car wash, I'm going to pay $40 again. Well, we have subscription model that, I think the initial subscription starts at $25 and scales up to $45. And so okay, maybe you're losing out on, I could get more margin there, but really what happens is I actually make more and my income is stabilized across all months because your average, essentially dollar cost averaging your customer throughout the year. And so, just that, the monthly recurring revenue is extremely powerful. Now, a lot of people might be going, wait a second, aren't you losing money? The average car wash costs about 80 cents to $1, for an express tunnel. And that's like all your water, electricity, your chemicals that go into it. And so your average customer, through our data and historical data, washes their car about 1.8 times a month on a subscription. So, this doesn't account for, the overhead, to run the facility, but you can see that there's, even as $25 subscription level, there is very heavy margins there to add value. And if that's stabilized throughout the year, that's amazing. We also are able with the full, so you can increase income, then you can decrease expenses. That's another way value is created. And a lot of these mom and pop owners, they were never able to scale to 7, 8, 9, 10 locations, which would be what is required of them in order to get buying in bulk discounts from their vendors. And so, with us acquiring a larger portfolio, we're able to do that and really lower our cost across the board for all locations. We're also able to, get equipment, discounts as well. Water reclamation systems, we can reuse the water on site and drive our expenses down even further. So there's that. And then there's adding the additional streams of income. We can, add a bunch of kind of perks to the subscription, or we can even add an additional subscription, like, hey, come wash your dog and get your car washed too. Which for me, I have a dog I think it's brilliant, right? It's like $200 a CapEx, and you've got somebody paying $20 a month to come wash their dog, right? So it makes the money back very quickly. Now, the reason why I like going into that is I like investors understanding how the money is made, and therefore the returns make sense. And so, cash on cash, your first year of stabilization, you're probably, 5 to 7%, portfolio dependent. But we offer a 10% preferred return, because in years 3, 4, and 5, our cash flow is ramping up on most of our locations, like 10, 12, 15%. And so it's a very cash heavy business. On the back end, the returns are we do 60, 40 to 20% IRR, 40, 60 to 30% IRR, and then 10, 90 afterwards. So we don't cap the investor in this particular asset class. Now, what does that mean for an investor? This is very conservative underwriting. If you own your own car wash, you're like, man, that seems really low. We put out really conservative underwriting. We're probably looking at a 2x equity multiple for our investors in 5 years. However, anybody that does own their own location knows these things make a lot more money, and they do. But we just want to make sure we're showing very conservative returns to our investors, because if they like those returns, they're going to love it when we hit our higher leverage, like exits with, exiting to a private equity group or even an IPO.
Yeah, sure. Yeah, and I think that, of course, makes sense, right? Put out, sort of under promise and over deliver. It's a much better, approach to these, attracting investors than telling them it's going to be, 30% IRR, and then you come in with 15. You much rather set those expectations in the right direction. So is this move because of sort of what's currently going on in the economy, or is that just, it was sort of we were already thinking car wash? What was the strategy there? Is it just a diversification move? What was your thought process behind sort of adding in this additional asset class?
Well, largely it was a diversification move. I mean, the premise of our company, and one of the founding principles is in the name, passiveinvesting.com. So the passive investing, how can we help our investors achieve multiple streams of passive income under that, risk mitigated, risk adjusted returns, under one roof. So really, we had started building out this vertical well before any sort of recessionary environment took hold. But it's fortuitously timed, because passive investors, they're chasing yield, right? And to their benefit and to their detriment sometimes. But this gives them a nice alternative to invest in an operating business that's backed by real estate, and still get a nice healthy return, risk mitigated, risk adjusted return. So it's kind of a combination of all of them, and it gives us another opportunity to offer a different, for when you work with investors, everybody comes in with their different goals. Do they want cash flow? Do they want equity? Do they want tax benefits or diversification? And sometimes if you only offer one product, it's really hard to help. You can't help everybody that comes to you. And we really wanted to be able to do that. is offer multiple ways that, investors can engage with us in our portfolio.
Yeah, makes total sense. And it's, diversification, people think about it a lot of times in just like different asset classes or different, even just, whether it's stocks or real estate or whatever. But diversification is also extremely important from what you just mentioned, is that you have these different investors are looking for different returns, whatever that, whether it's cash on cash or it's equity, like you said, equity multiples, or it's tax benefits. All of those things come into play, and you may not maximize each of them on every single investment, but different asset classes will allow you to maximize one over the other. So makes really a lot of sense. I mean, I hear people, talk about, well, I have investors that only care about the tax benefits, don't care if there's any cash flow. I have investors that want as much cash flow as they possibly can. And it just depends on where that investor is in sort of their investment goals and what they're looking for. So yeah, at passiveinvesting.com, being able to offer them essentially to come at it from any angle, I think is a really smart move. What are you doing from I guess maybe differently in today's environment, in today's I guess recessionary economy? What's your strategies? What have you changed to help combat that?
Personally or professionally?
Actually open to either. I'd be happy to hear either one, because I think both sides of it are extremely important.
Yeah. So, personally, like as an investor, I'm looking for assets. It's going back to principles, right? I think, there's been a lot of exuberance in the market, and I myself have gotten caught up in it, right? Like, could this investment possibly go down? I don't know. I was just talking to a good friend of mine, well known in the space, just right before this call, and we were talking about our Bitcoin mining investments. We're like, that'll pay off one day, but today's not the day.
Right.
So, but we knew it when we got into it, right? And I have a methodology, and so when I placed that investment, I was like, okay, I need to be able to get paid multiple ways. I thought it was going to be in cash flow, but that's not the way I'm going to get paid. It's going to be in tax benefits. So, but that's what I encourage people to have personally is, when you're investing in assets right now, go back to principles, listen to the greats, like the Carnegies, the Rockefellers, Warren Buffett, right? Ray Dalio. They have principles they invest by, and I'll go through my top 7 that I like. And they don't deviate, right? And that is what not kept them honest, but at the same, but earning money in every single environment, whether the market goes up, down, or sideways, they're making money somehow, and they're able to sleep at night, right? So for me, I'm investing in assets that have capital preservation. If they're, it's one of the reasons why I invested in a Bitcoin mining fund versus Bitcoin itself. Like I couldn't wrap my head around, like Bitcoin could go to zero. It's like gold, right? Like, will the value of gold always hold? But no, I can always sell the shovel, right? That's how I kind of thought about that Bitcoin mining. It's like I'm investing in the shovel, the service, right?
Yep.
Blockchain is not going to go away. We can always pivot this technology. So there's that, right? Capital preservation. It's one of the reasons why I love real estate, especially over stocks, bonds, and mutual funds. Cash flow, making sure you invest in assets that have cash flow today. Now there's momentum assets, right? If you have all the cash flow you want, have the portfolio built you want, and you want to start swinging for the fences on development deals, go for it. But if you're not there yet, think about investing in assets that have cash flow today, even if it's 3, 4, 5%, with a clear plan for growth over the next few years. Then you're getting paid. And not only that, the cash flow is tax sheltered. Equity growth, right? And I'm not talking about just appreciation, but forced equity growth. How is the operator adding increasing income, decreasing expenses, and adding additional streams of income to the asset? That's one of the reasons why I really love the car wash business, because it's so ripe for disruption and consolidation, and there's some great cash flow levers, great equity levers. And then my fourth pillar, tax benefits. So tax benefits, make sure you are investing in assets where you get tax benefits. Now, it does take the notes off the table for a lot of people. I know a lot of people really love their notes. However, what happens if your note stops paying? Because I've been in a position where my notes have stopped paying. And that's what happens in this type of environment, when people can't pay their bills. So make sure that, you've underwritten your borrower correctly if you're in notes. So, but, tax benefits is great. Smart use of leverage. I think right now, this is the one where there's been a lot of exuberance for the past couple of years. And there is going to be a reckoning for some people, and especially some operators that were buying, with adjusting rate mortgages, no caps. The music's gonna stop at some point. And a lot of those notes are mortgages, our loans are going to start maturing probably at the end of 2023 into early 2024. So there's the opportunity isn't here yet, it's coming. So hopefully we see a lot of these operators be smart and reposition these assets in the next 12 months. If not, be well positioned to play catch and help those operators out and potentially get a good deal. And then that kind of, we talked about inflation hedging. This is, if you can find an asset that cash flows, even with today's rates, lock it in. Like, you are locking, even, you're playing the game both ways, right? Somebody might say, well, rates might continue to go up. Fantastic. You locked in today's dollars and today's rate. What happens if rates go down? Fantastic, refinance, right?
Yeah.
You win, right? Especially if you meet all those other pillars. And then the last one is, if invest with smart operators. Now, a lot of people are like, well, I'm not a passive investor. Okay, great. You need to invest in your own education if you're going to be the operator. So you have to invest with intelligent people that like and trust, that have the track record to pull off in the business sense to navigate this environment. That is, like smart debt, that is, probably my number two, thing to pay attention to right now, especially in this environment.
Yeah. Yeah. It's, all really, really great advice. And I think for sure, nobody knows, I guess. Nobody knew that this was going to happen the way it did. Nobody knows what's going to happen here. But what we do know for sure is that markets go up and down. And so, like you said, if you get, yes, you might feel like this is a high rate that you're locking in now, but in reality, if it changes, you are either happy that you locked it in, or you refinance when it goes down. So that's a really great point, just to let people know. It's like, that doesn't, sort of mean forever. So it's kind of a, being smart on the debt, lower leverage, all of that. I love it. I love the advice, and both from a personal standpoint and a business standpoint, it makes a lot of sense.
Mm-hmm. Yeah, and I think from a business standpoint, this is a great. I heard, and please don't ask me. I forgot his name, but the CEO of Home Depot, love him or hate him, but he talked about fortress balance sheets, right? This is the time to, have no consumer debt, have all your lines of credit open, and make sure that your expense ratios are as low as they can be realistically, and wait for great opportunities. That's why it was so interesting to me. Reserves. That's where he started. Make sure that you have 6 to 12 months of personal and business reserves. And if you need to renegotiate any debt to fixed term debt, or get a rate cap on it, do it now. This presentation I heard 6 months ago. Make sure that you have your expenses as low as possible, but make sure you have your lines of credit open. And for me, I was like, okay, lines of credit, that's great. But he was like, liquidity is key in this environment, because you want to make sure that you can pick up those opportunities as they come available. Mm-hmm. It might not be a fire hose of opportunities like I think investors are hoping it's going to be, like 2008 and 9 and 10. But there will be opportunities coming.
Yeah.
And so just be in a great position, where you personally can pick up assets, or if you have like a syndicated business that you're working your list, you're building that investor list, it's cultivated, and you're ready to go when you have a deal across your table.
Yeah, no, that's a great advice. I think, yeah, a lot of people talk about the opportunities that are going to be coming, and I think, again, nobody knows 100% sure, like, for what's going to happen, but the reality is if, you know, some people are going to be well positioned to grab those opportunities, and that's why they're opportunity. It's not opportunity if you can't take advantage of it, right? It's just, here's another here's another thing that passed you by. So being sort of ready for that, event, and I agree with you. I don't think it's going to be like a fire hose of, there's going to be some things here and there, but yeah, so then you especially need to be the person that's able to take advantage of those opportunities.
Mhm.
Yeah. Well, that's great, Whitney. Let's switch gears. I asked you the questions last time, but we'll see, maybe if your answers have changed at all. But first one, being based on the show being know your why. So what is your why? I think whys do evolve, but certainly always interested to hear sort of what drives people.
Yeah, and I think they evolve initially when people start asking them the question, because how often are we, I wasn't trained to know my why as a kid. Like,
Right.
I don't think I
Yeah.
came up with a why
Yeah.
until like 10 years ago.
Yeah, exactly.
Um,
It wasn't a class in college or anything.
right. But I mean, I'm so excited for my daughter because, we're training her on that now, and she's 10. So I'm like, what kind of
Yeah.
life is she gonna have?
Yeah.
So my why, the why I do real estate, invest in invest my own personal development and those around me, is I want to have those five freedoms in life, and I want them for myself, I want them for my family, and I want to have financial independence and freedom of choice, freedom of location, freedom of time, and the freedom to make the impact that I want to have in the world. For me, there's nothing more, sad. I hate using that word, but for somebody who has like a great passion and gift, but they set it aside because they have to chase an income somewhere else, right? Like, how can you have all of those things? Because I truly believe you can. Now, like 15, 20 years ago, I thought asked me that question, I'm like, oh my gosh, I don't know how I'm going to get this done. Right. But that's where I think, building up that passive income has been, wholly freeing for, myself, my family. And I mean, just I love how many people's lives I've touched around me.
Yeah. No, I mean, it's truly that realization of what you can do for yourself, your family, and then greater impact outside of it. It's kind of, that's been for me one of the biggest evolutions in my own why, is like, this is like, this isn't doesn't have to be just about us. Like, it doesn't have to be just that, sort of my kids were the spark that sort of lit the fire, sent me in that direction. But like, then I realized, okay, yes, they're top of the list, but there's a lot bigger ways of thinking in terms of impact that you can have. So makes total sense. Any new skills or hobbies? I always always ask people about sort of their hidden talent or what, but anything new you're working on, I guess, personally outside of business?
Well, I mean, it actually is tied to business. It's tied to the impact I want to create in the world. I'm writing a book. It's been accepted by the publishers, so hopefully we can see that soon.
Congratulations.
Yeah. As far as skills, I've had a bit of a humbling over the past couple of years with like some, orthopedic health issues, nothing like major, but I am doing a lot more hiking and walking as my knee recovers. And so for me, that's been amazing. I'm like, oh, I can have more time back if I'm not like a complete nut running up a mountain all the time.
There you go. There you go. Yeah, certainly balancing that side of things. When people hear this, what's the best way to reach out to you?
Yeah, you can reach out to me at passiveinvestingwithwhitney.com. There, I have some free goodies for everybody about how to get started in passive investing and go into your next deal, or first or next deal, with confidence. Also, you can get access to my calendar if you'd like to jump on a quick phone call talk about real estate, how passive in real estate might help you. Also talk about car washes as well. And then you can also find me on LinkedIn, but passiveinvestingwithwhitney.com is probably the best place.
Perfect. And we'll put that in the show notes. Final question for you, Whitney. Advice to people getting started. You can go at that from as a passive investor angle, as an active investor angle, however you'd like to take it.
Yeah. So I think it comes down to mindset, skills, and networks, right? And then we might have covered this at the, in our last show, but I think it's always worth hammering home is that you, once you understand your why, or at least start getting clarity on it and continue to ask that question, what do you want and why do you want it? Those two questions, regularly until you kind of like nail it. Then it comes down to the execution, mindset, skills, and networks. And if you're finding yourself stuck, you got to go back. And not just look at your skills and network, but go back and look at your mindset. I mean, that for me has been kind of like my learning mantra over the past 3 months is, I feel like I have a very solid mindset, but there was a couple of areas in my life that I was stuck. And then I'm like, wait a second, if I shift the way I look at this, I'm like, oh, now it's freeing. I can now move forward. Now I know what skills I need to acquire and who I need to bring into my world in order to get this done. So, what do you want? What do you want? Why do you want it? And then go after the mindset, skills, and networks that you need to get it done.
Yeah, love that advice. Listen, thank you for coming and talking to me today. Thank you for taking the time. Thanks for coming back on. I appreciate it. It's always a pleasure talking to you.
Oh, thank you so much. This has been great.
Yeah, absolutely. And people listening, when you hear this episode, please rate, and review us. I'm sure that will help us get more great guests like Whitney. All right. Have a great day, everyone. I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.